Welcome. This is Senior Care and Lifestyles Baby Boomer Tax Update. I'm your host, Marialana DiMarzio, and I am here with Fran and Madelaine, and we're going to update you on new tax laws. This is the year 2020. So I think everyone is aware that for 2018, Congress passed new tax laws which affected just about everyone. And are there any changes for the 2019
Yes.
tax year and 2020 to
Yes,
come?
definitely, definitely.
So let's start with 2019 because that's what everyone's filing.
Mm-hmm.
What are some of the changes?
Well, at the very end of 2018, December 31st, they passed some extensions on some of the credits that had been eliminated. So if you started now to come in to file your taxes earlier, you might have missed some of those. One of them is the tuition and fees deduction. Because when you have children in college, or anyone, not just necessarily children, you get credits for that. And there's different kinds based on the kind of school you're going to. And one of them was the tuition and fees deduction, which had been eliminated, which is now reinstated.
Okay, so now I just want to clarify because when you say it was eliminated for the 2018 filing?
For 2019.
For 2019, and
Yes.
last minute they brought it
Last minute,
back.
they brought it back. So if you filed early this season, like in January, early February, they weren't even up and running. They weren't even on the forms yet. So if you did, and these credits would help you, by all means, go
So
back
you have to go
yeah,
back
and
and
you can
amend
amend
that.
it. Yeah,
You should go
definitely.
back and amend it.
Okay, and what about for 2020? Are there any changes that you're aware of now for 2020?
Yeah, the new Secure Act, which was passed recently also in the end of December, benefits a lot of retirees, and those provisions start in 2020. So if you're taking your IRAs, you have to take a required minimum distribution, like a little bit every year, you have to take it. They extended the age for that from 70 and a half to 72. So you can work a little longer, you don't have to take it out right away. And they're allowing people to put money into their IRAs past 70 and a half, as long as they're working now, just like 401ks.
Oh, okay.
Because people are working longer than they used to. So they're just extending the time that they can save.
So that's if they're working this year and they're going to file next year.
Exactly. That
They
will
get that
take effect,
benefit.
yes, by
Okay.
next tax season.
And the other issue was the college for the children.
Yeah, that was one.
Is while you're
Yeah.
filing now.
Right.
By April 15, 2020.
Exactly. And also the mortgage insurance premium deduction. Okay? Very few things you can itemize anymore, but one of them is mortgage insurance. And the premiums is if you had, you had to pay that in order to get your loan. They are now reinstated. So if you paid any kind of mortgage premium at the end of 18 or during 18, by all means, go back and reclaim that, because that could, save you some money.
Oh, that's interesting. Okay.
Yeah,
So-
a lot of, I just want to add just something
Yeah.
for anyone that's in that type of a situation. A lot of tax companies will let you come in and they'll do a review for you, like where we are, and it will cost you nothing, and they will let you know if you fall into that category or not. So people should not be afraid to do that. Unless the return is amended, there would really be no charge for that. So it's really important for people to know that they have that opportunity. They just need to act on it. Because if you do more money, you should obviously find out if you're going to get it.
Yeah, and last year I think everyone was very nervous because that was the first year of changes.
Right.
And it was like, oh my God, what are we going to do? So
Right.
it is a good idea to go back and review and make
Yeah,
sure that you
yeah.
tackled that okay. Because like you said, more information came out.
Exactly.
And you can make that
Exactly,
amendment.
right.
So it doesn't hurt. Doesn't hurt. So what specific changes were made to retirement accounts?
That's what I was just, beginning to say, with the ability to take out less, over a longer period of time. And also for beneficiaries of IRAs, because in this, age group, they're leaving money to their children, their grandchildren, whatever. The beneficiary used to be able to take that out over their lifetime. Now it has to be in 10 years. So that changed.
Oh, okay.
It's just planning.
That's a
for
big
the
difference
future.
from when you
It
say
is.
a lifetime
Right.
to 10
10
years.
years.
Exactly. So
That's a big difference.
You're right. You're absolutely right.
And
So-
I know that comes down to planning, which we kept mentioning last year.
You're right.
Right.
But
You're
it's
right.
very
Yeah.
important to do that. And hopefully you
Yeah.
planned a little better this year.
It's like even with your savings, you have to plan
Right.
in order to get the best benefits. And the same thing it is, you know, when in regard to taxes, so that you are getting your fair share. And you're not doing it. If you're in a position to do this with IRAs and things like that, you should definitely do it. Just want to go verify with Fran. So if I wanted to do that IRA next year, and I didn't put it in this year, do I still have till April 15th
Yes,
to do it
yes.
of
That they didn't
2020?
change.
Okay.
Yeah. So if, you know, usually by the end of the year is when you have to make your deposits, but they let you go till April.
Oh, okay. So
So,
that you
so
go
it
up
would
like,
count for the year before, because there is a large penalty if you don't take out your required amount every year.
oh,
It's like 50% excise tax you pay.
oh,
So,
that's
and not,
very,
yeah,
very large.
it is, and not
Yes.
every bank or every brokerage firm will remind you, you know, that, oops, you're 70 and a half, you're going to be 72 now, take the money out.
Right.
So you kind of have to be aware of that yourself.
It's always good to get as much knowledge as you can for yourself, not rely on others. Not that they may mean any harm or anything, it's just that if they feel it's your responsibility, then it's your responsibility. And that's one reason why we have this show. So the next question. So I know that for 2018, okay, people were getting lower refunds. They didn't plan for that
Right.
adjustment, okay? Or no refunds at all. That's what happened because it went in their check. But do you believe that that's true for this year, in 2019?
I
Yeah.
do, yes.
Yeah.
You're actually taking more money home, okay? And when it comes tax time, most people don't realize they've taken $20 or $30, whatever it might be, maybe $50. And, you know, over a 12-month period, you say 52 weeks if you're getting paid weekly, that comes out to a lot of money, and that changes it. For example, you know, I know someone, they got a $5,000 refund, and this year they only got a $3,000 refund, and they were very upset over that. So the thing is now is we talk a little bit about modifying things through a W-4 planner. And with that, there's so many things that changed on there with withholding tables and things like that, because there's no longer any exemptions that you take. Okay, so it's a flat kind of a thing. So if you were doing, I do single zero plus I take extra money out because I want to make sure I don't pay. Now that it's just single, it's all one flat thing. So I have to adjust now to take out a little bit more money so I don't have to pay. So it's a whole big formula, and it's a little tricky, but it's there.
But you made that adjustment from 18 to 19.
I just made it about 3 weeks ago.
Oh,
Okay, because
okay.
the new W-4 just came out
Yeah,
this year.
exactly.
There's a new thing
Yeah.
that came out this year.
Right.
And I happened to be doing some research for someone else, and when I looked at the withholding tables for payroll, that's when I realized, hey, you know, and luckily we're doing that for everyone that comes into our office.
So you would recommend that everyone that's working really revisit and refill out
Definitely.
W-4?
Definitely.
And
Okay.
if you have 2 jobs, even that
Yeah.
also.
Yeah, exactly.
Okay,
It's
so you
another
do,
whole-
it really is wise if you change your W-4, and then you would see a change.
Mm-hmm.
Okay, all right. Now, are medical expenses and charitable contributions all deductible?
Yes, with some limitations on the medical especially. You can take medical over 7.5% of like your adjusted gross income, basically your income that you add up, you get a total. And then to take your medical, you have to take 7.5% of your gross income, and then you can start to take medical. That's going up to 10%. So it'll be a little harder even to accumulate that much medical expenses to benefit you.
So that, but it would benefit someone who's really has a medical condition, basically, that's what
Yeah.
that's
Oh,
for.
Yeah,
absolutely.
definitely.
It's not
Yeah.
the normal, well, I went to the doctor for my
Right.
checkup and
Right.
I
Yeah,
have,
that's not going to help.
no, this is if
Yeah.
you had a surgery or something.
Right.
You don't have
right.
good coverage.
Yes.
But you
yeah.
can, so you probably will be able to itemize though on the state because they're letting you
That's
do a
right.
little bit more.
Right.
They're still
Yeah.
going with itemized. They haven't made the change the way that the IRS has made the change.
Yeah, New York allows you to still itemize.
Okay,
Yeah.
that's good to know. Now, how did the law affect children and other dependents? Now, especially since you said there's no exemptions on your W-4, so that's going to be one effect, right?
Yeah.
Yes, absolutely.
Definitely, definitely. It's hard to figure out how much you should have taken out, you know, every paycheck or every week, however you get paid. But with the children, since there are no more exemptions, for kids under 17, you get a child tax credit. And they raise that, the limit that you can earn to make that. So more people qualify for it. But that's $2,000 a child. But that's nice, except once they're 17, they no longer qualify for that. So then any dependent over that age, you get a flat $500 for. So it's a credit. It's definitely going to help because it's going to reduce your taxable income.
But so then
But-
you really want your kid to go to college so you could write that off.
Yeah, right. That's the way they look at it. You get the child tax credit they get at high school, 17, and then you can go into college
Well,
credits.
that's how I
you
just
know.
saw it when you said that. It's like, okay, everybody, go to college.
Yeah.
You're going to be in school longer than you thought.
Yeah.
Another concern for everyone is the health insurance mandate.
Ah,
And now, is there still a penalty for that, for not having health insurance?
no. Thank goodness.
It's all
First
over.
year that there is no penalty.
Oh, it wasn't in effect last year?
No,
No,
that
not-
came in effect in
Like when you're
19.
doing return this year, it does not
Right.
get a penalty.
Oh,
19.
okay.
Yeah, that benefits a lot of people.
Well, I hope so. I hope,
Mhm.
okay. So is there still any benefit left to owning a home? So I know there was a lot of
Yeah.
changes with that.
Yeah, definitely. You want to?
No, go ahead.
Okay. Always mortgage interest deductibility is great. And like I said, mortgage insurance premiums was one of those last minute changes that they allow you to take. So that's really the biggest part of it, tax-wise. Unfortunately, real estate taxes are most likely not going to be able to benefit you this year or last year either because of the SALT limitations. That was the state and local tax limitation. That's capped at $10,000. It was last year and this year too.
Yeah, in a state like New York,
Yeah.
that's nothing. Somebody
Mm-hmm.
maybe in Idaho, that's
Yeah.
brilliant.
Yes.
Yeah, metropolitan
Right.
area
But
is
in
not.
New
Yeah.
York, it's very difficult.
Exactly.
As in New Jersey, I mean, our tri-state
Yeah.
area is a bit
Yeah.
high.
So the only benefits then are your mortgage
The mortgage
insurance,
payments, right? The mortgage insurance premiums. And there are another credit that they reinstated was for the solar heating. So if you put solar panels on your roof or you rent them, whatever you do, you get a credit off your taxes for that too. So
Oh,
that was
okay.
reduced, but at least, there's something.
Okay.
And if your home is like a rental, you do have some more advantages to do.
Yeah.
If you're able to rent part of your home, it's not
What are you referring to? Maybe a two-family
like
or
a two-family or three-family and things like that. There
Mhm.
are advantages with owning a house like that.
Okay, but not for people who are renting a room on Airbnb. That's different, right?
It's different.
Different thing, yeah.
Okay. So most people wonder if there's any age when they no longer have to file a tax return. Is that true?
No,
Not really, no.
no, it's only income. That's all the IRS or anybody will look at is how much money you make. You can be 5 years old or you can be 500 years old. If you have income that's above the limits where you should pay tax, send them that check because they're going to come find you if you don't.
There
So-
are people that are not required to file.
Right.
Okay, that's it.
Yeah,
because
that's
it's
the limit.
under the
Yeah, right.
filing requirements.
So
But
you mean if
some
you
peop-
make under a certain amount of money, then you don't
Right.
have to.
Right.
But it does go by your income.
Yeah.
Right,
Not
and
age.
sometimes people that are under the filing requirements, what they do is they have withholding taken out. So if they do that, then they have to file taxes to get that money back, because it's money they're paying to the government that they did not have to do.
Okay, well, all right, so they set that up to pay it? I don't,
Yeah, if you're getting Social
Yeah.
Security, you have the option to take withholding taxes and things out, and a lot of people opt to do that. Okay, and then they never change it as their income is going down.
oh, and they don't realize that they no longer have to pay taxes.
Right, because their
Right.
income is under, so they wind up.
Is that threshold variable, or is it just like, well, if you make under 20,000, there's no tax? Does it vary from state or?
Not from state.
Not for the IRS.
Yeah,
no.
no, they don't care what state you're in. It varies by filing status, whether you're single, married jointly together, you know, then you have a higher limit before you have to file.
Oh, I see.
Or if you're head of household, you know, as long
All
as
right,
you're
so one
supporting
person
someone.
or two
Right.
people
Yeah,
together.
Exactly.
depends, right.
That
right.
would be the issue.
Yeah,
Okay.
yeah.
As baby boomers are getting ready to retire, what can you suggest that they do to plan ahead? I'm big into planning, so.
Yeah, well, generally, like we've been speaking all along, you know.
Well, yeah, we could
Right.
reiterate. The first thing, which I think is very interesting, is find out what your limit is for you, whether you are the joint couple filing together or single. Do you have to pay taxes? Add up your income. Do you qualify? Do you have to have that money taken out? Because that does make a difference.
Definitely.
And you
Does.
should plan
Yeah,
for that. That is
definitely.
one thing.
Tax
Definitely,
planning
yeah.
is crucial, okay?
Yeah.
And when you're actually sitting, if you're doing your taxes and you're a baby boomer, person that you're sitting with should be able to tell you things that are going to help you not only for next year or the current year that you're working or whatever it is, but they should also be able to help you with some kind of tips that you can carry over for the next 5, 10 years, however you want to do that, and talk to you about maybe putting money like we talked about in IRA, or you're going to retire and you're going to take your money out, how to roll that over properly. Because just like the IRAs can be exorbitant with the excise tax, if you take out money from your 401k and it's in what am I looking for? What word? Well, anyway,
Any deferred compensation
deferred
plan,
comp.
right.
Thank you.
Yeah.
Plan. You have to roll that over into the same type of an account once you retire. Otherwise, you can get hit with an enormous amount of taxes.
Okay. And also what you mentioned before is in relation to that, where you could take out that 10-year span. Now you
Right.
have
Right.
to
Right,
plan.
yeah.
Exactly.
That's very
That's
important, yeah.
That's very important.
Yeah, definitely.
Yeah, so those things you do have to pay attention to. So, is there anything else that you want to go over that should be very, should we
Important.
reiterate anything about the planning?
I think the planning is something we have to really work on. I think probably one of the most important things people can do this year for themselves is to take a look at that W-4 planner. This way they can figure out how they're going to come out next year. Do you want more money in your paycheck every week? Or would you rather have more money taken out so that you can get a refund the following year? And the other thing I think is important, if you are having a balance due and you're not expecting that, make sure you're following the rules for that. There's estimated payments that could be made during the year, and if you don't do that and it winds up you want the whole year you have X amount of dollars and you don't have the money to pay for that, that can also run into a lot of extra money that you owe the IRS.
Well, because they tack on the penalties and
Exactly.
interest.
Yes,
Right.
It's
and-
the two
Yes,
items.
yes.
And they could sometimes, the penalty can start at $205, or it can be as much as your tax liability.
The whole tax liability.
Yes,
Yeah.
So they could double it, in other
Yeah.
words.
Oh,
Yeah.
yeah, yeah.
plus
And
your
it-
interest.
Plus the interest, right.
So that's an important thing to plan. If you see that you're in a situation where
Right.
you're having a balance due, talk to somebody that's going to give you the options on how you can do that. I mean, you could pay by April 15th. That's probably the best way. You can do it where you can have debit, a debit taken out, okay? You can make payment arrangements with the IRS. There's a lot of different things that you can do, but to ignore it and say you're not going to file your return because you have a balance due, that is probably the worst thing that you could do.
Well, can we clarify that just because we have a few minutes?
Okay,
I don't know if everyone understands the difference
okay.
of, all right, I don't have the money, that's one issue that I'm not gonna pay. And like you said, you can make some kind of payment arrangement, payment plan. Sometimes if you are in that lower income, you can freeze it for the time being.
Right.
If you, really are not capable. The IRS will work with you in that
Right.
respect.
Yeah, yeah.
And somehow you can find a way for that. It is a separate issue when you do not file.
Right. You
That
can
is a
fi-
separate fine,
Exactly.
separate
Right,
penalty.
that's a late filing fee that also is, I think,
Right.
starts at $215 and
yeah.
things like that. So it can really cost you. And the thing is, if you file, you've taken care of it, and then we just make some kind of agreement. There's lots of different things that are available. If you're it's the first time you may have a balance due, there's things that you can do with the IRS to kind of work that out. And we only have a few minutes because we can actually go into probably another half-hour show talking about people that are insolvent and what would be available to them.
Right, but just for that particular thing, even if they don't have the money, because I just want to help the people out there
No,
like
they
you
do.
Yeah,
do
of course.
that don't understand, like they get scared. Oh my goodness, I owe $1,000. I don't have $1,000. I can't let them know this.
They know.
They know.
They know.
They
Yes.
know,
Send
and
the
the truth of the
paperwork
matter
in.
is, they know,
Right.
and you probably won't become aware that they know until 2 or 3 years later, and now your
And that's
situation.
even worse. But if you put the papers in, even though it has that amount in that you owe,
Right,
with
right.
no check attached to it, you'll
Right.
get another letter.
Exactly.
You'll
And it, yes.
eventually you'll work out that payment plan. But it's very important not to add to those penalties and interest, because again, it's a separate issue.
Yeah. And people should understand, because we all get this like 100 times in the season. I want to file an extension because I don't have the money right now.
And that is something
Yeah,
different.
that's a
Even on
different
your
thing.
extension, doesn't it
Right.
ask you what do you owe?
Exactly. It's
Okay, an extension
to
is
file.
an extension time to file, not
Right.
to pay.
Exactly. So if you're going to come in, just know that we have to figure out more or less what you might owe, and you have to pay it. And then you can actually file in October. You get a 6-month extension.
Oh, that's what an extension
Yeah,
is
it
for the
goes
6
like
Right,
months.
for
October
6 months
15th.
now.
Yeah.
Okay.
But
And
not,
even if-
but not for money, though.
That's right. Not for
Right,
your money.
but-
Yeah.
But even still, they should file the paperwork regardless.
Definitely.
Even though they
definitely.
don't have the money.
Yes.
That's the one thing you want to stress on that part.
Yeah, definitely. Yeah.
Well, we shared a lot of information tonight, and if we missed any of these deductions, is there any way to correct our returns?
Yes.
Definitely. Yeah.
It's called an amended return.
Mhm.
And you would do that, and you'd have to wait until the first return, your original return, you'd have to wait, what, 30 to 60 days to make sure it's processed?
Right. Right.
And then amend the return, because if you send it before the first return was processed, it just gets kind of messed up
Yeah.
because it's not processed yet, and they won't know where the amended return belongs if the
right.
original one, was done and not processed.
So basically, you need to make sure it's in their system.
Yes.
Yeah, and they process the first before we do the second.
And
And
it's
that's
pretty easy nowadays to know when they receive your stuff because you're doing electronic filing, so you basically know when that's taken care of, or you can just, there's numbers you can call to track your refund.
And that is really what you were referring to before with the new law
Right.
that was
Right, exactly.
Yes.
December 31st that went into
Yes.
effect. If they filed early in like
Come in.
January, February, and they didn't quite take advantage of that, that would be the amended return
Right.
Right.
that
right.
could be done.
Yeah.
Is there a limit, or like, the amended return, can that be done at any time during the year after your initial filing? Or do you have to say, well, that's April 15th, October, is there?
Now you have 3 years from the April 15th date, 3 years from the date the return was due. So 2019 returns are due April 15th. So you would have 3 years to go down the road to amend that return. Then it's considered a closed return and you can't fix it anymore.
Okay. But you
Unless
have,
the IRS sends you a letter.
Well, then,
Okay, you may,
Yeah,
and if
exactly.
it's in your favor, there might be a probability that
Yeah.
you're not going to see that.
Right. They won't give you the refund. And I just wanted to mention quickly that in New York, when we're talking about planning, $20,000 of pension for everyone is tax-free. It's
So the first 20,000 of
Yes.
your pension.
yes, and New York does not tax Social Security either.
I was going to ask you about the
Yeah.
Social Security.
Yeah.
So that, because that is income.
Right.
Right.
It's
right.
income.
Exactly.
So in
Yeah.
New York, so when they say it's a pension-friendly state, this is what they mean.
Yeah, exactly.
Yes,
yeah,
exactly.
Yeah.
But it's only your first $20,000.
In pension, right.
And after that, it's all up
It's
for grabs?
Taxable, exactly. And that's for a husband and wife if you married jointly. So you could basically get 40,000 off.
Oh, each? You can
Yes,
get-
20,000
Well, I
each
think that's
per
some
filer.
big information.
It is. That's a lot.
For everyone?
Yeah. And also, just one more thing for.
Oh, we have.
Oh, we have time. Okay.
Yeah, no, we
There
have.
are
Okay.
2 forms in New York City that you can file without filing a regular return. It's called a 210, and everyone alive in the city can get $63 back.
Wait a minute.
Uh-huh,
What do you
yeah.
mean by that?
It's called the New York City 210. It's the school tax credit. Anyone who's a city resident is entitled to this $63 credit as a single person, $125 for a joint filer, and you can file just that one little piece of paper by itself without a return and get that. The second form is called a 208, and it's also a credit for renters or homeowners. And that depends on how much you make and how much rent or real estate tax you pay. But they're credits that you don't have to file a New York State return to qualify for. They're standalone forms, it's called.
So the first one I would get back because I'm not in school and I don't have anybody in school.
Doesn't matter.
matter.
Doesn't matter. If you're alive and you live in the city, you get $63 for coming here, living here.
Really?
Yes. And if you
They
filed
don't
a
tell
state
you
return,
that.
it's probably on your return.
It's probably on your return.
You know, most of the software that's around now does it normally.
And the last thing, just repeat the last part.
It's
'Cause you
the
get-
second form is the 208, and that does depend on income and either how much rent you pay or how much real estate tax you pay. But you can come into any one, of our offices, and we'll do them for you alone, so you don't have to file a state return. So even if you have no filing requirement, you still could get a refund.
That's amazing.
There you go.
Well, thank you, Fran. Thank
Well,
you,
it's our pleasure.
Madelaine.
Well, thank you.
I hope that you all benefit from the information that was shared today. And good luck. And plan. Don't forget to plan. Thank you.